You feel free
Okay.
to jump in and like help me out with anything that you notice too. Feel free to like drop some nuggets. I know you're like a beast trader. Yomi is actually one of my best friends in this business. He's been running the play with me since day one. So I'm grateful to have you here, bro. All right, so
Okay.
order block right there. Boom, the black one, right? So this is the order block. The reason that's an order block is because that's an institutional candle. That's where the banks put their order in order to go for buys, right? So the first they're gonna sell to buy. Boom. That's basically how it goes. Like you could find another order block right here. Look, there's another order block right there. Boom. There's also a lot of liquidity right here. You see how there's like a triple bottom, so you got some liquidity there. You also have a gap. Like if FBG, guys, FBG will be the space between the 2 wicks. These are I'm pointing out key areas for you guys, like so you guys could start seeing this on your own, right? So that will be the FBG. If you guys want to learn more about this stuff, I actually learned it from ICT. If you guys go to YouTube, he got a full mentorship. You go to YouTube. I got it open already somewhere. Got so many tabs open. But you're gonna go to YouTube. You're gonna type ICT. This is like the mentor of mentors, guys. Like if you guys really want to learn the sauce, you don't gotta hear it from me. You could hear it from the source. He got a full mentorship on YouTube this year. He's already like 40 episodes in. I'm on like episode 30, so I suggest you guys watch that as well. Okay, that's the man right there. That's the man with the sauce. All right, so FBG will be the space between these 2 wicks. All right, let's find another FBG. Um, there's an order block right here as well. So these are just key areas. I'm just pointing out key areas. And there's also order blocks that go bearish order blocks, right? So this one up top, this one's an order block as well. It's always going to be the opposite move prior to the big move, right? That's how you identify them. And you could identify those in different time frames as well. So they're in all time frames. The reason I'm doing so many of these is so you guys could see where the order blocks are at, right? Remember, we're in the daily, so there's a lot of momentum here. You don't really have to do all of these, but I'm just showing it so you guys could see where the order blocks are at. Also, let's find some fair value gaps. Let's find some gaps. So we said the space between this wick and that wick. You see how there's an empty space? Those are called gaps, liquidity gaps, or fair value gaps, or they got different names. But those are key areas because the market always want to come to those areas, and the market wants to test those areas. The market will come test those areas, and usually you can find some good entries in those areas, right? So yeah, the dollars. Yeah, we got a question. Can we get the recording to look back on it? Of course, bro. I'm gonna drop it on YouTube, and you guys could watch it as many times as you want. So right there, boom, another order block. So boom, boom. Okay, we got plenty of order blocks. Now let's find. Let's go into a smaller time frame, right? Let's go into the 4-hour now. Let's see what we got. Now, you're gonna start in a bigger time frame. You start moving into a smaller time frame. So as you could tell, the market came to this area where we have this order block, and it's kind of testing it. And if you guys follow Scalp King, if you guys know Scalp King, one of the key things he teaches is to learn the candlesticks, right? You guys know about. I don't know if he went over that with you guys, but one of the key things that he teaches is a candlestick cheat sheet, right? So if you go to YouTube, and you go, to Google, and you're gonna go to candlestick cheat sheet, right? And you're gonna get a bunch of different let me see, different images. So we got I like this one. They're all cool, but you should study all. The point is for you to actually memorize what each candlestick stands for, right? So let's click on this. So I'm going a little bit over everything that I know, guys. If you guys got any questions, feel free to interrupt me and just ask, okay? All right, so let's see. So we're looking for a bullish candlestick. So look at this one, Dragonfly DOG, a hammer. So these candlesticks, they signify a change of momentum. So the market is going to change. So if you guys start seeing this type of candlesticks, that means that's a reversal pattern, right? Reversal pattern. So if you guys could see here, this one over here looks like a hammer. Like let's go back to here. Look, hammer, like a nice wick and a nice body up top. Nice wick and a body up top. So that's indicating a change of momentum. It's not for sure, right? It's not for sure. That's just one of your confirmations. In order for you to execute a trade, you want to have at least 3 to 5 confirmations, right? So for example here, one thing that I like to do, I like to measure the range, right? I like to measure the range. I'm gonna go over something that's really key with you guys, something key. This is super key. So you're gonna put your fibs from lowest low to highest high. And the main thing you want to get out of those fibs is the 50%. Eventually you get to see this automatically, right? Because you have put down the fibs so many times that you know more or less where the 50% is. You don't really need to like worry about none of this stuff too much. But at the beginning, yeah, you need to worry about this because you need to memorize the percentages. So the fibs, these are ICT fibs. These are the fibs that ICT teaches, right? So he has the EQ, the OTE, 62% retracement, the sniper entry, 70% retracement, another OTE entry. So OTE stands for optimal entry, right? So the optimal entry will be this area over here, this area right there. That will be the optimal entry, right? But you don't want to go just based on that, right? That's just one area, that's one confluence, that's just one confirmation. You want to go based of more stuff. So what I like to do, I want you guys to learn how to identify a discount versus a premium, right? So discount versus premium. What is discount? What am I referring to when I say discount? Discount will be when the price is below the 50%, right? So when it's below the 50%. Anybody got questions? No? Okay, I'm gonna go ahead and mute everybody. If you guys got questions, just unmute yourself.
Mike, is everyone in this chat new to trading? Everyone.
I believe we have all type of traders, new traders, old traders. So I'm going over basics all the way to like a little more advanced stuff.
Okay. Once you should let me know, let me just teach them some advanced stuff.
For sure, for sure. I'm gonna go ahead and finish the premium and the discount explanation and you could take over.
Okay.
All right, so back to premium and discount. Why is this so important, guys? Because the premium will be above the 50%. So all of this space over here is premium. And anything below the 50% is discount. And why you want to know where the premium and the discount is, right? Why you want to know where the premium is, because when it's premium, you're going to look for sales. When price is at a premium, you look for sales. When price is at a discount, you look for buys. It's that simple, guys. It's that simple. So we have a range from this to this range. Now we have the prices testing the order block over here. So we got the price at a discount, and we have the order block being tested, as well as a fair value gap. Look, if you guys could see right here, there's a fair value gap as well. So there's a lot of confluence in this area, which indicates that the market might go for a little bull run, right? I'm not going to say it's going to go like all the way over here, but we could find some price on buy entries in this area. So what you're going to do now you have sort of a bias. Now you know that you're going to put your fibs from this range to this range, and you know that you're buying at a discount. So you're going to try to target maybe the OT right here. Try to target that area, right? You target this because price might continue to go down after that, right? So that would be for a buy entry. Over here, you're going to look for sales. Over here, you're going to look for buys, right? So let's go to a smaller time frame. Go to a smaller time frame. Now you start looking at what's going on here. Boom, boom. So it still looks good. It looks like it's getting a little bullish momentum. It looks kind of bearish. So you go in even closer. Now you could start getting even closer. Oh, let's look closer. What it's trying to do. So we need it. We need a change of trend, right? That's when you're gonna know that it's gonna go bullish for sure. So how you gonna know if it's a change of trend? When it starts making higher highs, right? At the moment, it's making higher highs, as you guys could see. So it was making lower low, lower low, lower high, lower low, lower high. So we needed to break trend. We needed to break trend. So that's when that's gonna be the other confirmation. So at the moment, it's kind of going bullish, right? Look, you see it's making higher high, lower high, higher high, lower high, higher high. So right now, look, right here in this area, it hadn't broken through that area, right? So it's some sort of like what you call this, like a triangle, but whatever, that's retail patterns. I don't really focus on that. We needed just to break that high. But at the moment, so now you know that the market's trying to go bullish. So you're gonna try to find some buys. So you go to EU, and you're gonna see the pattern that is EU and the dollar, they're 90% correlated, right? They're 90% correlated. So when the market's so correlated, it's easier for you to find entries, right? So now what you're gonna do, you're gonna look at the dollar. Let me take this. Look at the dollar. Where you go? Where you go? Where you go? The dollar DXY. Where you go, there? All right. Oh, that's Dogecoin. Whatever. Let's just put it out again. US share, futures, dollar. Boom. So you're going to line up line this on this side. Minimize this screen. Go ahead. Willie, how far?
I just woke up, bros.
Huh?
Hi.
All right, so that's the dollar. Yeah, really. So as the dollar, and this is the EU. So this is really correlated, guys. The reason I'm gonna explain this, guys, to you is because this is practically my
Don't do it,
strategy.
Kiana. Yeah.
This is practically my strategy. This is what I like to use to find sniper entries, right? So I'm all about sniper entries. I'm all about like small stop loss, low risk entries that you're not gonna blow your account, right? So the key is account preservation. Account preservation. So now that we know that the dollar is kind of a bullish in this area, right? So we're gonna try to find an entry. So how we gonna find an entry? We're gonna put our fish down, right? We put our fish down. We're gonna wait for the dollar to come to this area, right? So our sniper entry is gonna be around here. Boom. So when the dollar starts buying, we're gonna sell EU, and I'll show you how. So we're gonna look at this. We're gonna look for the same pattern in EU. As you guys could tell, they're very correlated. Like if I was to invert them, they're actually doing the same moves. So basically, you're gonna go ahead and do your fibs here too as well. You're gonna find that area that I just pointed out, which is over here, right there. And this is like a sniper entry, guys, because the market's gonna come here. You're gonna snipe it. You're gonna try to snipe it. You know, as soon as the market comes to this area, you're gonna snipe it for a sell, right? So you gotta wait. You gotta be patient. You gotta be patient because the same thing plays here, guys. The same thing plays. Premium discount. So you're gonna wait for the price to come to a premium, and you're gonna look for sell. You guys could tell. Look, as the EU goes up, dollar goes down. They're so correlated, guys. This is the strategy. This is it. There's nothing else. Keep it simple, and that's basically it. Gonna come, you're gonna wait. We could wait it out. If you guys could, we could wait and see what happens, right? So we're gonna wait for the market to come to this area. We're gonna wait for the market to come to this area, and we're gonna try to execute a sell. But what if we want to look for another type of entry, right? We could actually look for sales as well, right? So if you guys look here, the market actually came to our OTE entry. We came to the OTE, and it started going down. And let's look at here. Look at here. Same thing. Market came to the OTE area, and it started going up. So it touched that area right here. Look, it touched it, and it started going up. So you could have gotten for a buy right here, right? You would have gotten for a sell here. You would have gotten for a buy right there. You would have called maybe, let's see, 7 pips, a quick scalp. But sometimes these small entries, they turn into bigger entries, right? But the key is also trade management, guys. If you guys go into a trade, you gotta manage the trade correctly, right? You gotta make sure you're moving the stop loss to break even. You gotta make sure you're doing the math accordingly as well, right? So if let's say you have a $10,000 account, right, or a $100 account, it doesn't matter. You want to make sure you're only risking per trade max 0.5%, guys. 0.5% per trade, right? Doesn't seem like much, but this is what's going to preserve the account. This is what account management is all about, like preserving the account, guys. You don't want to blow accounts. You don't want to like throw random numbers, because what happens is you're going to lose 1% one day, 1% the other day, 3% the other day, and you're trying to get that lottery winning trade. It doesn't work like that, guys. You got to have risk management. So let's say 0.5%, right? If you want to risk 0.5%, let's say you have a $10,000 account, that will be $50. $50, right? $50 on a 10K. So what you're gonna do, you're gonna go ahead and measure your stop loss, right? So let's say you were gonna go in this buy right here, right? Small scalp, guys, like this, like sniper entries, like we're talking about like 2, 3 pips, five pip entries. That's what's up, you know. So you're gonna go ahead and put you're gonna go ahead and put the 50. You know you're risking $50, so you're gonna divide 50 by the amount of pips you're using. So 50 divided by 5 is 10, right? 10. So you can actually drop a one standard here. You could drop one standard, guys. You could drop one standard, and your should be the next high, right? Your TP should be like this high over here, right? In a perfect world, right? In a perfect world, you always gonna aim for the next high. But as the trade progresses, you want to make sure, like, okay, so you got on this buy right there, right? You got on this buy right there. As the trade progresses, you want to make sure you're moving your stop loss to break even. So if you went in right there, you move your stop loss to break even right away, right? You move your stop loss to break even. So if it comes back and takes you out, you're good. You know, you didn't lose any money. You could always come back in and find another entry, guys. But the key is always to move your stop loss to break even. Make sure you're risking accordingly. And as the trade progresses, right, you want to make sure you're taking partials as well. So if you would have dropped you say we dropped the standard here, right? And look, it went 1, 2, 3. It went for 6 pips, like 6 pips. So you would have made $60 right here, $60, a quick back, and you're only risking $50. You made 60. That's good. That's good. That's good. You know, you're risking. You always want to risk like 1 to 2, 1 to 3, 1 to 4. You know, you don't want to risk like 1 to 1, 1 to 1. Like that's okay, but you always want to make sure your risk is small and your reward is bigger. You know, you want to be a professional trader, guys. Professional traders, they're gonna risk small to win big, and that's the way you're gonna make you're gonna be a successful trader. That's the only way you're gonna be a successful trader. Okay. Any questions so far? I guess everybody understood everything. Good. All right. So everybody understand the EU dollar strategy? Amazing, man. All right, cool, man. I'm glad you liked it. I'm glad you liked it. Yomi, you said you wanted to drop some sauce for them?
Yeah.
What you want me to give you host, or you want like whatever you want? Link for YouTube, please, also, and thank you. Of course, Angelo, I got you. I got you. I got you.
Make me a host. Let me share my
Got you.
screen.
Okay, so I'm gonna go ahead and give the call to Yomi. Yomi is actually a really successful trader. He has mastered the market. This guy has mastered the market, like real stuff, guys. I don't know how many videos he has watched. I don't know how much hours of studying he has, but this man right here, I think he has over like he has thousands of hours studying. Like no lie, I'm not gonna cat with you guys. Like he's actually like a real good mentor as well. Like I'm gonna give you the floor, guys. I'm gonna give him the floor. It's actually a blessing to have him here. Let's do this. To make host. All right,
Okay.
your host, brother.
Okay. Um, Actually, I want you guys to understand how the market moves. There's something I've been working on for the past, I think for the past a year now. I've been studying, and it's how to like get into the market in a much more simple form. As in getting in and out without stressing yourself and stuff like that in a much more simple form. So normally I trade all pairs as in crypto, index, forex pairs, name it, everything. I trade each one of it, and I love marking up my pairs. Yes, I love marking them up. So I want to show you a brief illustration on how you can mark up your pairs from higher time frame to the lower time frame. So if like, let's take for example, let's start from U-Chef. Let's start marking up. So as you can see, it has been on the.
Share your screen. We can't see nothing.
You can't say anything.
No, you gotta share screen.
Okay. Let me see. Okay, sorry. I thought I was sharing my screen already. Okay.
Yo, by the way, guys, Yomi, he's from Nigeria, and this
Can
guy
you guys see it
is a
now?
beast.
So, like, this morning, Asian time, this is gold. This is gold. And there's something I need to let you guys know. I say that I was like, wow, there's nothing big about this trade. And it's just for you to know how to risk, to know what you're risking. Like, say, for instance, if I'm going to be sending off from this place, like sending off from this QM setup, that means my SL is going to be on top of this week. Yes, on top of this week. So I'm going to be setting up from here, and that's my entry. That will be an entry from here. That will be an entry from here to here. You understand? Coming down from here to here. It gives me another entry again, a QM setup. As you can see, it gives me another entry. So that means I'm going to be selling from here downwards to this place. I'll be selling from year to year. So I'm going to be teaching you how you guys can mark up from your higher time frame direction to your lower time frame. And I'm going to be revealing some things that have been that I discovered that people are not talking about. Rather, they will just give it another name instant and start giving you headache. So I discovered this. That was I've been seeing it for the past 1 year, and I was like, how could I put this to play? As in, how could I study it? And one day it came to me that the chart is always the same. As in, everything has been programmed the same. It's just like you to like go to a store, go and get a PS game, and it's been programmed the same thing, exactly the way the chart is. That's the same way. So the chart is just the same. You understand what I'm saying? Everything is the same. So whatever chart you're looking at, maybe GU, EU, U-Chef, index, it's the same. It moves the same. There's nothing, as in there's no difference about it. You get what I'm saying? So we're gonna go to, let's start from somewhere. Let's start from U-Chef. So we're gonna go to the higher time frame in U-Chef. Let's start from U-Chef. I'm gonna break it down from U-Chef, EU, GU, UJ, maybe end up in AUUSD. So let's start from U-Chef. This is the weekly chart. So all I need to do is just for me to, see where price rejected from. You understand? I need to know why price rejected from this area over here. This area over here. I want to show you the area. I want to know why price rejected from this area over here. Yes, this area over here. So that means that this area over here, that means that it seek liquidity above this area, you understand? So it rejected from it. Fine. I've known what happened here, you understand? I need to know what happened in the future. So I've known what happened here. So I would like go back to the recent display of what is going on here. So price is currently coming down, you understand? So guys, I want you to look at this place. I want you to look at this place. This red line, this one that I'm shaking over here. So I want you to look at the last week that came to this place, this area. The last week that came to that area. The last week that came up to that area is this week. I'm sorry. This week over here. That was the last week, you understand? And immediately it came to that area. As you can see, it immediately came to that area. What happened? It rejected from that area. Can you see it? It rejected from that area. And when it rejected from that area, what happened? It now did what? It broke to the upside. Isn't it? Price broke to the upside. Price rejected from this area, which is the red line, and did what? It broke to the upside. So this structure, as in what is happening here, is like rejection, breakout, rejection, breakout, rejection, breakout. Wherever you see rejection, breakout from a particular zone, trust me, price is going to return to that area. So I want price to now return to this area of rejection. You understand? I want price to return to this area of rejection. Once it comes there, I'll be looking for a buy opportunity. You get what I'm saying? I'm going to be looking for a buy opportunity. Price rejected from this area. You understand? This area, you understand? And once it rejected, it gave what? It did a breakout to the upside. Once I see the structure, I want to be buying from this rejected area because price is going to come to that area. Presently now, we are in sell in U-Chef. U-Chef is giving us a swing trade. From the weekly, it has been going up, down, up, down, up, down. You can see it's going, it's coming down, going up, coming down, going up, coming down. So likely we might see a U-turn again. We stand going up. So we want to be bullish at this very moment in U-Chef. We stand. So I'm gonna be looking for what? A setup in this area. This is where I need to now drop down to the daily to now tell me exactly what U-Chef is about to do. So I'm gonna go to this area, you stand, this area over here, go down to a daily candle. Yes, that's the daily candle, yes. So presently we're on Tuesday, and that's the bullish candle coming up, you understand? I'm still gonna okay, let me drop down to 4 hours to see what is going on again. Yes, that's 4 hours. As you can see, there is a swing in this trade. Sorry guys. Okay. As you can see, there's a swing in this trade. That's I want to show you the swing. The first swing is from here. It broke down to the downside. It came up with a wick, you understand, and it broke down. It came again, it broke down to the downside. It came up, yeah, you understand, and broke down. Right now, I want it to come up to this, maybe into this middle of this place, to this middle of this place, you understand? I want it to come there and now drop down. So for me to get an information of what is going on here, because it's a swing, it's just swinging. A swing is just going up, down, swinging up, down, swinging up, down. So for me to get an information of what is going on there, I need to drop down to a 1 hour chart. Yes, this is my 1 hour chart. As you can see, you see what is going on? Like what I just explained. Going up, rejected, dropped down. Price did what? Came back to that area. It dropped. It broke this low. This is the low that it broke. This was the recent low. Let me draw it out for you so that you can see it very well. That's my QM setup. And that's my low. This will be my low. It's a swing, you understand? So it's swinging down, like you're getting down from a staircase. You get what I'm saying? So it's swinging down, getting down from the staircase. So it's a swing. Have you seen it? So I'm going to do the second one again from the QM. It's also another QM. Sorry. That's the low. It broke down to the downside, and that's my entry. You're going to see my entry. That's an entry over there. It always comes with an entry, no matter what. So this is the recent low. This will be the recent low now. This place is going to be the recent low. Yeah, this is going to be the recent low now. And now we want price to come to this area to now sell off. I'll be looking to short this area. So you get what I'm saying? So I want price to like, okay, come to this area over here. Come up here. You understand what I'm saying? I want price to come up here. And I'll drop and drop. I want it to come up here and now drop. Hope you get my point. So it's a swing trade. Wherever you see a rejection, this is what I mean by rejection. This is a rejection going up, rejection going up, especially when it's a sell. You understand? So you have to monitor that rejection. Whenever you spot this rejection, know that you're going to be selling from that rejection. This is another rejection, you know, price rejected, and it broke down. It gave you a POS. Once you see that, then you're going to be, you expect price to come to that rejection, you understand? To come to that area, the 50% percent of that area. So for you to like sell down. So it comes there, you understand? It drops down. Again, it did the same thing here. This is a rejection. It rejected like this, you understand? So one price to like do what? Come up here, you understand? And sell again. It's very simple. You get what I'm saying? This is
Bro, that's
U-shape.
sauce. That's sauce right there.
That's U-shape for you. You understand what I'm saying? This U-shape for you. This is from the higher time frame. It's from the higher time frame, from the weekly. So I expect it to do what? To still come down, start selling down. It's as simple as that. Go to your higher time frame, look for what is going on from the higher time frame. Once you spot it, you start saying, I want it to come down a little bit. You understand? Once it comes down a little bit, then we'll be expecting it to buy. You understand? We'll expect a reversal. So it can do a reversal anytime, any moment. So we'll expect reversal maybe from Wednesday or Thursday. Wednesday or Thursday. Wednesday or Thursday. So that is U-shape for you. That's U-shape. The reason why I'm still expecting it to like come down a little bit, I want it to come down with a at least a body candle or a wick. You understand? But though it's come down, it's already down with a wick. You understand? So we have to be very obvious of what is going on in that area. You have to be very, very careful. Price might like, okay, let me switch. You understand? But what I mean by switch is reverse. You understand? Reverse from this place. Take out this eye over here. Maybe take out this eye over here. And once it takes out that eye, that means you're ready to buy. And once you're ready to buy, if it takes out this eye over here, that means you're ready to buy. Once you're ready to buy, you now go to your higher time. Once price is ready to buy, you now go to your higher time frame. Where is it likely to go? So definitely price might want to come to this area to sell off, this area over here. Or better still, come to this area over here and sell off. It's not necessary price to like fill in all this place. You understand what I'm saying? It's not necessary to fill in all this place. So price might come here or come here to sell off. So once it gives us a 50% of this swing, this green candle and the other green candle, once it gives us a 50% coming here or here, either out of the two, maybe you can sell from here or here, then you'll be ready to sell off. It's going to give you a change of momentum on either of those two. So let's go to the daily for you to say, yes. This is what I'm saying. It rejected, you see, price rejected. If you look at this area over here, price rejected and came down. So let's go to like 4 hours. Let's go and see what happened. Have you seen it? It's a very clean setup. I don't even need to stress myself. So definitely I'll be expecting price to come to this area to sell off. So why? Because there's a fair value gap. Secondly, this swing over here, it fails to come to this place. It fails to come to this, and this is a rejection from this area. You understand? So when immediately it rejected, you understand, and came down, we needed price to come to this place. We wanted it to come to this QM, but it did come to this QM. So definitely I'll be expecting price to come to this area and sell off. Expecting price to come to this area and sell off. So that's U-share for you. Let's go to another pair. We're going to be working on EU. Let's go to EU. Yes, let's go to EU. So firstly, we'll go to the weekly. What's the weekly saying? We go to the weekly. So it's very simple. Look for the rejection and the breakout. It gave us a rejection from this area that we're looking at. I'm coming. That's the area. It's very simple. Don't stress yourself. That's the area. It rejected from this week over here. See price, it went up and did what? It broke to the downside. Once it broke to the downside, then I expect price to come to this range. Understand? This range, I want price to come over here, understand, and give me a sell. I want price to come over here and give me a sell. So what's it doing? It's going, it's buying, it's going to that area to fill up that area, to go to that origin. This is the origin that broke the downside, that broke price to the downside. It first rejected. You look for rejection. It first rejected from this place. You see, it rejected from this place, went up and dropped down. Went up and dropped down. If you look at your charts, look at all the pairs. It is the same move every day, every time. It hasn't changed. So I want price to, like, come to this area, you understand? Give me a reversal from this area over here, and start selling. So this is the weekly chart. This is the weekly chart. Let's now drop down to daily charts to see what's going on. Let's drop down to daily charts to see what's going on. All what you need to be looking for is rejection and breakout. Rejection, breakout, rejection, breakout, rejection. So let's go to daily. Let's go to daily. As you can see, this is the daily charts. See what I'm saying? It rejected, came up, dropped down, boom. You see it? It rejected here, came up, dropped down. Is that? So it is two things in common. It's either price comes to this area to sell off, or comes to this area over here. But whatever it is, I want price to just come to this area over here, around this area over there. So I will be ready for it. I will be ready to sell from any of this angle. It's either here, or either here, or either here, or either here. So I'll be ready. I'll be prepared to sell from this angle. You understand what I'm saying? So let's now drop to 4 hours chart to see what is going on. Let's drop down to 4 hours charts. Yes, this is our 4 hours charts. This is our 4 hours chart. So let's see how price started swinging from this area. I'm not meant to remove this place, this one, but I'm going to remove it. I'll put it back. So look at it from here. Price rejected from here. You understand? It rejected from this place, came down, did what? Did a breakout. Once it did a breakout, what happened? Price came back to that area. Have you seen it? When it came back to that area, it did what? Went up again. When price was going up, look at this place. Look at this candle, this one. It came up, rejected, broke out. Once it broke out, it came down again. It came to this area. Have you seen it? The same thing happened here. Sorry. The same thing happened here. Price came up, rejected. That's the wick. I want you to look at this wick. This wick. Have you seen this bullish candle? This is a wick in the middle of it. It came up. This is the bullish. This is a bearish candle. You understand? So it came into it, rejected with the wick, and did what? It ran off. It went up. You understand what I'm saying? Broke out of this swing. This is the initial high. It broke out of this swing. This is the first initial high. It broke out from it, came down. This is another high over here. Have you seen it? This is another high over here. It broke out of it. See? Break of structure. It broke out of it, came down again. You understand? So this is another present high over here. This is another present high over here. It did what again? It broke out of it. You understand? So it's either we will be looking at two things. This is the break. This is the candle that forms the breakout. You understand? That forms this eye broke out. You understand? So it's either we'll be looking at two things. It's either price should come to this area. It's either price to come to this area because I have two entries for EU, or continue buying. Price should come to this area because you need to be looking at the higher time frame swing for you to understand where price broke out, the rejection and breakout, the rejection and breakout. So let's go to 1 hour's chart for us to see much more better ahead. That's it. As you can see, price respected, price was going up, respected the other block, you see, went up, respected the other block, went up, broke out this place, is that, respected the other block, and did what again? Went up, broke out this place, came here, you see the rejection here. Look at the rejection here. I want to show you something. Have you seen the rejection here? This is the rejection, you stand. Have you seen it? The wick came down, you stand, and broke up. And when it broke to the upside, look at it. That was the entry. Look at the entry. Look at it over here. That's the entry. Have you seen it? Price came here with a wick, and it did what? It went up. You understand what I'm saying? The same thing happened here again. Look at it. Look at it. The same thing happened here again. It rejected with this wick. Have you seen it? It rejected from here with this wick over here. Understand? I'm talking about this wick. This wick, this body. Yes, this one over here. It rejected, came down here, you understand? And did what? Broke to the upside. Have you seen it? It broke to the upside. So what happened? What's price doing now? It's going up. Price is going up. I gave a signal on this buy setup this morning. Price is doing what? It's going up. Have you seen it? Just look for rejection, breakout, rejection, breakout. This happens every time, every day, and every single fucking chart. It happens and it repeats itself every time, every day. You understand? So if price now stops here and says he doesn't want to go up, further up, that it's going to break this zone, that means that we are in a reversal pattern. So we now drop to the 4 hours to see where price have been buying from to broke out the swing. You understand? So this was the initial. Let me take out this guys. Let me take it out so you guys will see. So this was the initial high. This was the initial high, isn't it? This is the initial high, isn't it? Price broke out from this initial high, isn't it? So definitely we want price to, like, you know, maybe come to this area over here. Come to this area over here and start buying. You understand? Maybe price should come to this area over here because there's a rejection. This was the rejection, because this was the rejection over here. Price rejections from this bearish other block, and did what? It broke to the upside. This was the initial move. This was where the bank started moving up. So we expect price to come to this area. You understand? Maybe if price should not respect this our order block, this our 1 hour, this our 1 hour swing over here, the one I drew out over here. The one I drew out over here, this one, the one I drew out over here. So if price should not respect it going up, you understand? If price should not respect it going up to break out this initial high. Hope you guys are listening.
I'm listening.
Are you guys listening? So if price should like not break this high over here, so we expect it to swing. Yes, that's a swing trade now, you understand? So we expect it to, like, if price should not break this high, this initial high, so definitely we're expecting it to break down, you understand? Come to this area. Come to this area for us, you understand? And get a buy. So we'll be looking forward to buy this this place. You understand? We'll be looking forward to buy from this place, this area over here. Because this was, you see what I'm saying? This was the initial high. This is the initial high over here, you see? That was broken. The same thing happened here again. You see, every swing, there's every swing in every hour, every time frame. That's the reason why you have to go to multiple time frame for you to see what's going on. Have you seen it? So that was the first swing over here, the first one, the second one, and this will be the third one. You understand? This will be the third one. Why the third one? Because this was the initial move. The initial move started from here. This place, yes. The initial move started from here. It rejected from that week, from this other block, this bearish other block, you see? And so we want price to like maybe come down there, you see? It rejected from there and started doing what? Started moving up. It's rejected. That was the week. This is the week it rejected from, you see? It rejected from it rejected with a wick, much more like a pin or a hammer or something like that. So whatever price wants to do now, price will like, okay, let me come into this area. Maybe price wants to come to this area, start selling, start buying from this area. So that is EU setup for you. And in the higher time frame, we'll be targeting to this area over here. This area over here, anywhere, it could be here, it could be here. So we're going to be targeting here. So that's EU for you. Let's, I think this will be my last pair, GU. Are you guys here?
Yes, sir.
Okay.
Are we doing a trading session now?
So this is GU. So let's start from the weekly. Let's see what the weekly is all about. Okay. So I want to see where it rejected from. So let me go to the monthly so that I'll be able to see it all. So this is the weekly. Let's go to the daily. So if you look at this place, this area over here, you can see there was a rejection from this place, this eye, and it came down like this. This is the wick, isn't it? This is the wick. It came down from this. There was a rejection from here. You understand what I'm saying? So it came down immediately. It came down to this bullish other block. You understand what I'm saying? It's bounced off. So once price bounced off it, I know that in the future price is going to come to this place, this exact place. You understand? And bounce off it. You understand? It's going to bounce off. So let's trace it. That was what happened here. See, price bounced off it. You understand what I'm saying? Price bounced off it. So the next thing is what we have been looking for, rejection and breakout. Rejection and breakout. Rejection and breakout. Where's the rejection? The rejection is over here. It's rejected with a lot of wicks. Yes, that's the rejection. This is the rejection over here. Have you seen it? That's the rejection. It rejected, went up, and did what? Broke to the downside. Rejected, went up, broke to the downside. Rejected, it rejected from this place, this area. It rejected, it was coming down, rejected, went up and broke to the downside. You understand what I'm saying? So we want price to revisit that area. It came down to that area. That is this place. It came to this area. You understand what I'm saying? It came to that area. So I'll now be looking for setup in the lower time frame. I'll be looking for setup in the lower time frame. I'll be looking for setup in the lower time frame. So this is the daily. You stand. This is the daily. So I'll be looking for setup in the lower time frame to tell me if it's going to reverse. I just don't drop into trade and say I want to start trading. I'll go to the lower time frame to tell me if it's ready to reverse. So I'll go to 4 hours charts. You see, it's just accumulating, just building up momentum. I'll go to the 1 hour chart. I have to go to every chart to look for an engulfing. Engulfing means maybe a bearish engulfing. Yes, that's what I'm looking for. A small body candle and a long candle to the down. A small body candle and a long candle to the down. So I have to like test all time frames. So this is the 4 hours. It hasn't given me an engulfing in the 4 hours. I'll go to the 1 hour. As you can see, it gave me an engulfing. It gave me an engulfing. This is a bearish candle. Have you seen it? From this entry, this is I'm not meant to be sharing all this with you guys because none of you guys are in my mentorship. I'm not meant to be sharing, but my brother has been with me to and fro from the very beginning. So we have been working hard day and night. So I just have to be here for my brother and you guys too. So this is it. Have you seen it?
Appreciate you,
That's
bro.
the bearish. That's the bearish. That's the bearish engulfing. You understand? That's the bearish engulfing. This is it. It gave me a bearish engulfing. Someone can scalp from here and put your SL on top of here. You can scalp from here and put your SL, but I won't dare enter the trade. Trust me. Why? Because this is the last candle that make the up move. This is the last candle. This is the last candle that make the up move. I would like to see this candle get taken out. If this candle doesn't get taken out, then I would like to see this low that was rejected from this candle. You know, this was a rejection, you understand? It rejected from here. So definitely I would like to see this low get taken out. So it went up, the same thing we are looking for. This is rejection. Then I want it to confirm to me that it's going to come down. So I'll wait for it to break down. I want it to come down. So once it comes down, then that means I am in a bearish candle. That means I'm in a bearish move. It's willing to come down. So I'll wait for it to come down. Right now, it's just accumulating. It's not really giving me a bias to go up or come down. So I'll wait for it to come down. Once it comes down, then that means I'm in a trade. Why? Why am I in a trade? Thank you. That means if it comes down like this, this is what I'm likely looking for. This is what I'm likely looking for. Come down, come in. This is what I'm likely looking for. Go up. And, start trading. You understand what I'm saying? This is the rejection. This is the rejection. Break to the downside. Come up, you understand? Enter from here and start trading down. That's what I'm looking for. It's as simple as that. That is exactly what I'm looking for. I just don't jump into trade. Why? Because this was the last move to the upside. I want price to prove to me that it wants to come to the downside. So it came down, rejected from this place, went up, respected this other block. So I want price to do what? To break down. Once it breaks down, then definitely it has given me reject and break out. Reject, breakout, reject, breakout. So it has given me a reject and break to the downside. Once it breaks to the downside, then I'll be willing to like, okay, I want to sell. So I'll go swing with it and I'll sell down. Hope you get me, guys.
I'm here. I'm paying close attention.
Okay. So that means I'm in a trade. I'm in a trade. So let's go to US 30 and NAS 100 and see what's going on. So if you guys can see, where is the rejection? You can see it's just there. I've already lined it up there. You ought to have seen the rejection. The rejection is there already. That's the reject. Well, firstly, let's go to the hour time frame and see where it bounced off from. So this is the hour time frame. This is the weekly. As you can see, this is a rejection block. See, that's the week. Have you seen it? Have you seen the week? It rejected from here, came back up, you understand? Rejected from here. Price rejected, you understand? It rejected from here, you understand? Went up, formed a wick, and dropped down. It broke to the downside, isn't it? It broke to the downside. So I know definitely that price is going to come to this area. You understand what I'm saying? It's going to come to this area, no matter what, it's going to come to this area. So what the price did? It came to that area. Have you seen it? It came to the body of the candle. Have you seen it? That area, it came there. That's the body. It came to that area, instant, and did what? Started coming down. This is the weekly time frame. So definitely, I will just drop down to a lower time frame to see what is going on in this area. I want to see what is going on in this area. I want to know what is going on in this area. Hope you guys are listening. I want to know what is going on in this area. So I'll now drop down to daily. So what is daily giving me? Daily is giving me a momentum to sell, isn't it? But it hasn't broken this bullish candle to the downside. It hasn't broken. So I'm looking for an engulfing. You understand? I'm looking for an engulfing to confirm that, yes, I'm in a sell. So I'll now do what? I'll now go to 4 hours chart to look for an engulfing candle. Thank you. I have spotted an engulfing candle. I have spotted an engulfing candle. This, I'm sorry guys, I just need to. This is an engulfing candle. This is an engulfing candle. You understand what I'm saying? So price has given me an engulfing candle, saying what? Telling me that price is ready to come down. You get what I'm saying? Price is ready to come down. So price has given me an engulfing candle. So what am I going to do? I'll drop to the lower time frame again. I'll drop to the lower time frame. Have you seen it? So what did price did? Price is simple. This is it. It rejected from this week and did what? It broke this low. It broke this low. It rejected from this week and broke this low. Once I've seen that this low is being broken, you understand what I'm saying? Then I'll wait for the next move. I want to be selling. I want to sell down, you understand? So I'll now look for a bearish candle to sell from, to sell down, to continue selling down, you understand? To take out this low, because it has broke this low, you understand? So the swing came from this place to this place, it broke this low, you understand? So I'll now look for a bearish candle. So I'll now drop to the 30-minute charts, you see? So that's my 30-minute chart. It has given me a bearish candle. So I'm going to be selling from year to year. It's a very good risk management, with a very good risk management, for crying out loud. So let me say my entry is at this place. My entry is at this place, and my SL is at this place. You see what I'm saying? So I want price to like come here and drop. And drop. I want price to come here and drop. Or better still, come to this week, because at times price might do that. Come to this week. Come to this week and drop. So either of the two is either price comes here, drop, or comes to this week over here, the week over here, and drop. You understand? So this is just how it looks, as in there is no big deal about it. You go to the lower time frame for low entry, lower risk entry, and you you know what you're risking. You know what you're risking. You're not even stressing yourself out. You're just cool about it. Why? Because you know what you're doing. You know what you're trading off. You understand what I'm saying? So it's as simple as that. There's no stress to it. There's nothing. It's as simple as that. So let's go to. Are you guys still with me?
I'm here, but if you want to call it at night, so it's fine. We'll be in the call for like an hour.
Okay, maybe let's call it tonight then. Let's call it tonight.
We can always do another call tomorrow.
Oh, there's not going to be any call tomorrow, right?